Hello and welcome once again to Policy Bazaar. I'm Arjun Bhagat. In today's show, we'll talk about riders and insurance policies. Now, simply put, riders are additional benefits offered by the company at a marginal cost over and above your primary insurance policy. Now, to know more about it, we have with us Yashish Dhaiya, co-founder and CEO of Policy Bazaar, to help us understand them better. Thanks, Yashish, for joining us. Now, tell me first, what are riders and what are the riders in life insurance policies which are crucial to consumers buying insurance policies?
Sure. So any base policy covers the base product, whether it's life insurance, it's health insurance, it's motor insurance, and riders are those add-ons which enhance the value of that particular policy. They bring in some feature which helps the consumer more, and the consumer can decide. The base plan mostly works for most consumers, but the consumers can decide which particular rider each one of them wishes. As we speak about life insurance.
So one step back. Is there a cost advantage? Because that's what a lot of people want to know, that, all right, I'm buying this policy, but if I buy a rider, will it be that much more expensive? How expensive will it be? And how are they priced? Before we get into the specifics.
A ballpark is riders should increase the price of your policy by between 10 to 30%. And they are fairly significant in value. So I think they do deliver more value sometimes in the base policy itself. So certainly, at least in terms of rupee for rupee, riders are worth looking at. But 10 to 30% ballpark, that's the cost of a rider.
Right. So what about life insurance policies now? And what are the riders that one should really look at when we buy a policy?
Sure. So let's break up life insurance policy into two kinds of policies. One is pure protection, which is the life insurance. And the second is when you look at investments. Now, when you're looking at the pure life insurance, the kind of riders you would have are going to be protection oriented. So critical illness. So death is covered by the life insurance policy, but critical illness, disability, terminal illness, those are the kind of benefits you could get. You could also get monthly income benefit riders now, because they enhance. So these are the kind of, now a critical illness rider, what it would do is, in case there's a critical illness, one of the 35 odd critical illnesses, the payout or a part of the payout would happen still. What the personal accident rider does, in case the death happens or a disability happens because of an accident, then a certain amount gets paid out, which can be quite significant in relationship to the life insurance policy. And what a terminal illness rider does is, in case there's a terminal illness, a part of the amount. Now, a terminal illness is defined very strongly. A doctor has to certify that there is no chance that the individual can improve.
Of survival, no chance
of survival and no chance
beyond
of
a certain point. Oh.
Yeah, no, it has to be clear that there is no chance of survival or improvement. In that case, some part of the final payment that is supposed to be made in the life insurance policy is paid out as a terminal illness benefit.
So that is a rider, but I believe that's also part of some of the term insurance policies.
So see, any rider can also be part of a policy.
Right.
So there's a base policy, and then riders can be either compulsorily attached to a particular policy type, or they may be
something that you need to buy additionally.
That you need to buy additionally. Secondly, you come to the investment kind of policies. Now, the way most of these policies are constructed is you pay for about 15-20 years, and there's a certain benefit that accrues at the end of these years, or upon the event of untimely death. Now, the riders that go in that area are mostly waiver of premium riders. So what that implies is 5 years are over, an unfortunate event happens. After that, for the next 15 years, premiums do not need to be paid, but the policy will continue. There is a family income benefit rider. What that does, in addition to not paying for premiums, the family could also get a certain amount of support every month, every year, as long as the policy continues. So these are the kind of riders that come in that area. But those are two basic kind of riders.
What about health insurance? Let's get into the health insurance, and those are very critical in that sense, and there have been a lot of innovations recently for additional riders to your main insurance policy.
Absolutely. So besides the main insurance policy, you can have lots of add-ons or riders. The first one is something known as a supplemental policy. Now what this does, if you look at health insurance policies, a 1 lakh health insurance policy will cost 1100 rupees, a 2 lakh policy will cost 2200 rupees, a 5 lakh policy will cost 5500 rupees.
Right.
Now, statistically, the chances of your expenses being below 1 lakh are much higher than when they go above 1 lakh. So it should not be a proportionate cost increase. So what some individuals could do, if they think this through, is they could buy a 3 lakh rupee base health policy and a 7 lakh rupee supplemental policy, which basically will cover them all the way till 10 lakh rupees.
Right.
And the cost of this policy will be about half that of a 10 lakh rupee policy, roughly.
Right.
And it will give pretty much the same benefits. In addition to this, The kind of riders that can come in is there is a critical illness rider.
Right.
Critical illness, as we've known, is those 35 diseases which can cause a significant health cost. And in that situation, you could have some benefit coming in. You can have an hospitalization rider. What this implies is for the days that an individual stays in hospital, a certain amount of cash every day may be paid to the individual so that the basic cost, when one goes into hospital, it's not just hospitalization. People have to spend time with the person may have a loss of income, there's a bit of travel cost, family, people moving around, etc. So those costs can also be covered under that cash benefit piece. You have OPD riders. What OPD means, most health insurance policies cover you only after 24 hours of hospitalization.
Right.
So one has to be hospitalized for 24 hours to get the benefit. What happens in case there are day treatments? Somebody's been to the hospital and they stay there for 2-3 hours and then they're back out again. That can also cost a significant amount. These days up to 5 to 10,000 rupees can be spent on that. Those OPD procedures can also
what
be
about
covered.
Day operations or
So there are surgical riders which provide surgery benefits and daycare benefits. So if one had a cataract,
because a lot of problems that people face health-wise are usually taken care of in a day or two.
Exactly.
A day hospitalization happens, but that is not covered by the
base
main
health policy. The base health policy construct does not usually cover anything less than 24 hours of hospitalization.
Right.
So most of these daycare treatments or daycare surgeries would need some kind of a rider coming in with them. So you have critical illness. Again, you have the disability rider. You have the OPD rider. These are the primary ones. There are lots of others that one can get.
So tell us a little bit about disability riders, because that's one aspect that you have been stressing on.
Disability happens far more often in the younger ages than death, and it's something that people don't plan for, because disability also causes loss of income in many cases. If somebody turns blind, if somebody loses their hands, it does cause a significant strain on the family, and most people are not adequately covered for these eventualities. So obviously disability comes in that. These days you also have specific riders in health insurance which may cover a specific disease. So there may be something known as a diabetes rider, which essentially covers those situations where it is already known that the individual has diabetes. So he may take a policy which is specifically inclined towards diabetes in addition to a base health policy. So there are all these kinds of riders that do come in.
So it makes sense to explore that a little bit more. But another insurance policy which is pretty much compulsory is motor vehicles, and
yes.
So we end up buying a lot of those. What are some of the riders which are important that one should look at?
Absolutely. So when we buy a motor policy, and whenever anybody who's been through a claim process will realize they do not get paid the entire amount, there's some
deductions keep happening as you go along. Yeah.
So one's got to be aware of what these, and sometimes claims get cancelled. So one has got to be aware about what these reductions are and why these claims are getting cancelled. So let's get into the riders, and some of these will help. The first one that comes is a zero depreciation cover.
Right.
Now, as one notices, a car depreciates. So after about 4-5 years, the car is worth about 40-50% of what it was at the start of the policy. So if somebody bought a 10 lakh rupee car, it's 5 lakh rupees. If they have a claim, they would only get paid 50% of the cost of the equipment. Up to 5 years, one can take a zero depreciation cover, which costs between, again, 10 to 30% of the base policy, and they would always get 100% of the cost that has been incurred.
Seems like a very interesting
It's a very interesting cover, because you will not be out of pocket when you have an accident and that light or whatever breaks away. The entire replacement cost would be paid. Along with this comes something known as a return to invoice. Now, what return to invoice? In case there's a total loss of the car, one would get the IDV value. The IDV value is the insurer declared value. So if you have a 10 lakh car, after 3 years, the IDV might be 6.5 lakhs, right? However, return to invoice implies that in case there's a total loss, more than 75% of the value is lost, you would get back the entire 10 lakhs, including registration charges, including invoice charges, including
that's a big one, isn't it?
That's a big one again. So, return to invoice is a big one. Then you have something known as engine protector. Now, when it rains in Delhi, you wouldn't know, but if you drive into the water and somehow your engine stops, and if you try to restart it,
I had one of those, one of my friends did that with his new BMW.
Exactly.
And he's still regretting it.
Exactly. The moment you do that,
claims are happening when nothing is really.
The claim will not be paid by the insurance company. The insurance company will not pay that claim because you tried to start the car when it was in a dangerous situation.
Right.
For that, you have engine protector cover. For oil leaks and water ingress, you have
and these are so important because one doesn't really know about these little nitty-gritty aspects of it.
You only realize when you go to the claims place and the person says, hey, you will not get your claim because, and you would say, what am I supposed to do? My car shut down. What am I supposed to do? I'm not supposed to start it. It's pretty obvious, right? You want to try and start it, but no, you're not supposed to start it unless you have the engine protector cover. The other one that you have is roadside assistance. Very critical in these days. Imagine you're driving somewhere. And recently, a friend of mine had an accident on a highway. Let's say it was on the Greater Noida highway, and he was very worried of getting looted. That what would happen, and he was very worried. He couldn't figure out where to get his a car repaired. So what roadside assistance does is you can safely lock up your car, stay inside, call the roadside assistance. They would come there. They would assist your car, get it back in order. Sometimes arrange for a hotel accommodation for you or a replacement car for you. So that is there. You have lots of others like replacement car. You have up to 3,000 rupees per day can be paid for taxis, etc. that you may have to use. So all these riders are there. There is loss of key rider. You may or may not know if you have a loss of car, both the keys must be with you. Otherwise, your claim shall not be paid.
I had no clue about that.
Yeah,
so that's a fact.
That's another fact.
It's one of those points that you actually sign on.
So riders essentially save you from those points because those points are there to protect the insurance company from malicious damage and from malicious costs. So, one has just become more aware, and I think the time has come when the Indian consumer needs to move on to being more aware and start taking these riders more seriously.
Right. Yashish, tell me about important riders for travel insurance because, we end up buying a lot of travel insurance. Are there any specific extra additional points that we need to look at?
Okay. So, a base travel policy would cover you for loss of baggage, a health insurance, a loss of passports, any travel delays, etc. That's what a base policy covers you for. It does not cover you for adventurous activity. You're going skiing or paragliding, etc. So you could take a rider for those activities. So for extra sports. What one can suppose it does not cover you for a lot of liability that you could create. So base liability is covered, so in case you cause harm to somebody without realizing, then there's a personal liability created. So you can have personal liability covers.
And that becomes important when you're traveling internationally.
When you're traveling internationally, when you don't know all the norms, like I just give you a very simple example. My grandfather pinched the cheek of a child in the US, and the police was called. He just found the child cute and he just pinched his cheek, and obviously he's 95, so he didn't realize.
Right.
But out there it was a massive issue. In case you get into jail, there's a bail bond cover because you may have to take out a bail and you may have to pay for that. So that covers that particular one. And there's some frivolous ones like you've got some golf hole-in-one. You got a few others out there, but they're not so meaningful. I think these are the major ones: sports and personal liability, as well as bail bond. What you could also consider is if you're carrying more expensive stuff with you, because remember, travel insurance has certain limits on how much it will pay you for loss of baggage, etc., right, for a hijack situation or whatever. So you could increase your limits, and that while it's not a rider per se, if you go into the detail of a policy, you could increase your limits by specific pieces. So
one last question before we take viewers' questions. Now, what is the balancing act of taking a insurance policy which covers a lot of the features, and then as opposed to an insurance policy that doesn't have them, and then one needs to take, is it the convenience factor or the cost factor? How does one actually balance that and say, all right, this is what
So basically what you're saying is, how does one look at a base policy which has a lot of the rider features inbuilt?
In some ways, how do you know that this is a very comprehensive policy as opposed to this one where I will have to buy riders?
I think the simple way of doing it is the base coverage is there in almost every policy. What one has to see is which of the rider features are being covered in which of the policies and whether they're relevant to you or not. Because remember, buying all riders is not compulsory for you. You only need to buy the riders that you believe. So for an older person, a personal accident cover is less valuable than for a younger person. Right. For a younger person, a critical illness cover is less valuable than for an older person. right? So it's very simple. If you're 50 plus critical illness, if you're 35 personal accident. Now, if both these riders are compulsorily inbuilt into the plan, they may not be as valuable to you than buying each one of. So you got to look at your unique piece. And the more important thing is when you take a base plan, you can do a search and find out which are the riders that can be added onto it to compare the prices. So if you have a term insurance plan which has a critical illness rider built in, or you have a base term insurance plan with a separate critical illness rider, you can compare the price of both, and you could procure the one that you wish to take. One has to go into the fine print of these as well. So
remember, that extra bit of an effort to actually dig out what the policy is about.
I would reckon if you had been to one of the comparison engines or whatever, it won't take you more than half an hour to an hour to get through the detail of this. And of course, these are, you're not buying these policies for return. You're not buying them for enjoyment. This is not an ice cream. You're buying it for a very grave event that may happen.
Precisely.
And in that situation, these are going to come in handy. So spending an hour on it is certainly worth its time. One should not blindly buy these policies.
Right, Ashish. Now it's time for viewers' questions. We've got Abhishek Singh from Ludhiana, and he says, I want to take a term plan for 25 years for myself and my wife. We are both doctors and have only one daughter. My age is 35 years old. My wife is 30. Kindly suggest a good term insurance policy. I want 1 crore cover for myself and 50 lakhs for my wife. And I want to take it online. And when I discussed this with my insurance agent, he was not in favor of the online policy. What do you have to say to that? Because now online policies are really gaining a lot of ground.
So I think 60 to 70% of all term insurance policies sold in the country are sold online. An online policy is far more convenient than an offline policy. See, medicals, if they are required, you do them in both situations.
Right.
But the biggest advantage of an online policy is you know what you're filling in, and you're doing it at the convenience of your own home or your office. You are doing it when you wish to do it. So you may do it at 11:30 at night. You are doing all the research online. So you're comparing various plans. Remember, most agents would have one company's plan or two companies' plans, and they would be promoting. Today there are, like if for example you went to a Policy Bazaar, you'll probably find about 15 different plans.
So you can do that comparison.
You can do your comparison. If you wish, you can take independent advice. Somebody who's an independent distributor is getting the same payout from everybody.
Right.
So it doesn't really matter whether you buy one or the other. For them, it's pretty much the same, whichever one you take. So you get all those advantages in the online policies, which and the cost is way lower. More importantly, from the research I have, it is fairly conclusive that actually the claims ratios, the claim payouts are a bit higher in the online plans compared to the offline plan of the same company. So the same company, they have an online version and they have an offline version. The same company is paying out more claims in the online one than in the offline one. I'm not saying it's definitely not less. It's at least the same or higher. Of course, the data is new and the data is fresh. And that's mostly happening because the company is more confident they've got the right data.
Right.
Now, right information from the customer. So now coming to the particular plan that the individual wants to buy, a 1 crore plan at a 4 lakh income is going to be steep. It's about 25 times. I think that might become tough. 8 to 10 times is very easy. Insurance companies can go up to 20 times. But that's the limit of what they would go to. I think one should also look at the various pieces like critical illness and disability along with the base plan. There are standalone plans that last a long time and are pretty low cost. So one can get a 10 lakh rupee critical illness disability cover for roughly about 2,000 rupees. So which is about 150, 180 rupees a month. It's not that significant, and the cover will be very advantageous if that unfortunate event was to happen.
Right, we've got Ajay Kumar from Agra, and he says, my date of birth is 26 December 1982. I'm married and I have a child. I want to take a cover of 3 lakhs. Which policy is better for me with the lowest premium? I live in Agra and have my business. He has a yearly income of 1.5 lakhs a year.
So I'm assuming this is a health policy, although because that's not clarified whether it's a term policy. As a term policy, 3 lakh would be too less. So one would have to go for at least 15-20 lakh rupee policy for himself. But as a health policy, if you're taking a 3 lakh policy, that's fine. I would advise you to maybe even go for a 2 lakh policy, but take a significant critical illness cover over it. See, normal diseases will not make you go over even the 2 lakh rupees in Agra. However, a heart disease or a kidney failure or any of the mental issues that have neurological issues that happen, they can become very expensive. Tumors, cancers, they can become very expensive. So take a critical illness cover if you can afford one. Take a critical illness cover of between 5 to 10 lakhs. And a health policy, you could even be a little conservative and take a slightly lower health policy.
Thanks, Yashish. Now, that's all the time that we have on this show. But you can write to us with your queries on ask.policybazaar.com, or you can write on Twitter at policybazaar_. And we'll see you next time. Goodbye.